You said an I word there, inflation. How worried should I be about inflation as a retail investor?
This is Trillions ETF Master Chef, where we interview the chefs of the finance world on their hottest investment recipes.
Welcome to Trillions. I'm Joel Weber.
And I'm Eric Balchunas.
So who's joining us today?
Today we have John Davi of Astoria Portfolio Advisors, who is here to talk about a really interesting portfolio that I thought was really good for this year and what we're seeing in the markets.
So John, what is this portfolio that we're going to be looking at today?
So this is what we call our inflation-sensitive ETF portfolio. So we believe in like an 80-20 approach where 80% should be in core ETFs and then 20% should be in like a thematic alpha-generating return-enhancement strategy.
You said an I word there, inflation. How worried should I be about inflation as a retail investor?
Well, so what happens is you usually get like a recession like we had last year because of COVID. And then after recession, usually the economy inflates higher. And what you see is inflation-sensitive assets like banks, energy, copper miners, metals and mining stocks, they typically do well in the year afterwards.
This wouldn't be used as your base. This would be almost like a side dish or something added on to that 60-40 type portfolio?
Correct. When we structure portfolios, we say, okay, 80% in the core and 20% could be your spicy flavor like a jalapeno.
You're speaking our language.
So let's take a look inside the portfolio. Why banking?
So banks typically do well when interest rates are rising, as they have been. So if you think about March 2020, the 10-year interest rate was like 30, 40 basis points, maybe a little higher. And currently right now it's like 1.6%. So as interest rates go up, banks typically do better.
So gold is an investment that comes up a lot when we're talking about inflation. Why not just be all gold?
That in the portfolio is more to kind of protect the portfolio, to dampen the volatility. Something like silver actually works better when you're in the earlier stages of a new economic cycle. Gold typically works better when you're in the later stages of the economic cycle. We thought it was helpful to have both.
All right, so let's look at the top two holdings, which are two sector ETFs that a lot of people know. It's the Spider Industrials and the Spider Materials. What's the logic there? How does that correlate to inflation?
Sure, so when the economy accelerates higher, typically material stocks and industrial stocks do well. So because we're trying to target a specific standard deviation or specific volatility, those two stocks have lower volatility compared to like XLE, the energy sector ETF.
John, one of the things I'm noticing here is that you can be very targeted because of the ETFs, right? So how do you go about figuring out how targeted you want to be?
So we start with the premise that, okay, we think inflation's rising. Which sectors or themes are going to be sensitive when GDP growth increases? So ETFs are a great tool. They allow you to have a very specific surgical kind of approach to target a specific theme you want. So that's why it works well in this portfolio.
So who's using this portfolio?
Okay, so we primarily service other financial advisors that's looking for protection for their portfolios and want to capture this inflation-sensitive theme. This is like a 1-2 year satellite trade, I would say, so you're not going to hold it forever. So it's somebody that is concerned about protecting for future inflation rises.
How do you bring crypto into a portfolio when you don't actually have exposure to it in the form of an ETF yet?
It's hard for us now to do it. You have to have a certain sign-off and certain net worth to own it, so it's been tough for us to incorporate it. We are waiting for when an ETF is available, and we'll certainly include it in our core model and along with something like our inflation-sensitive portfolio.
So on our podcast, we always close with a question that is, what's your favorite ticker? I think more people have chosen MOO than anyone else, but you actually use MOO, and I'm curious, what does it accomplish in the portfolio?
It's the best ticker ever. It really kind of captures the theme. So if you look, it's only had 3 down years, since 2008. You get agricultural companies, and it's a way to play food inflation.
John Davi, thanks for joining us.
Thanks for having me.